Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, welcome to today's market update. I'm going to be going over the S&P 500. I'm going to be going over the Dow, the Nasdaq as well too. What's been going on there? What can we expect moving forward? Moving forward with that. Also be looking at silver, gold, and the mining stocks as well too. Also going to be sharing with you some really interesting charts that I'm seeing right now and why I believe these charts are telling us that it's inevitable that the devastation is going to be much worse than I think most people think in the market. So I'm really interested, really exciting to actually share that with you. So let's get straight into the markets right now. So today, basically, what do we get? We've got a little bit of a gap down on the open and a little bit of a rally to the upside on the close through there. We're still getting this. It's still actually got this island reversal situation going on. And if I bring up my trend lines from here, we can also see. Let me delete that off the screen. We also can see that it's still well below the trend line through here on the S&P 500. We've got the support level through here. We had a bit of a gap up. We had a sideways movement and a gap down, and now we're just well below it. So even if we did get a bit of a pop to the upside through here, then I would say that we're probably likely to do something like that, or maybe it's just going to go straight down like that. Again, I have a target of around the $2,800 level there when it comes to the S&P 500. The Dow Jones, I'm also seeing sort of the same thing as well too. We can see how it's just we've got this very nice move to the upside, hit the 27,500 level, and then rejected it big time. And now we're just sort of holding here right now. Bit of a gap down, bit of a nothing day today. So even if we did get a little rally up to the upside, I see this thing probably going back down, probably down to around about the $23 level, and the same for the Nasdaq as well too. So I see that through there. But one of the reasons why I'm saying that is because of what the weekly charts are telling us. You can see here, look what actually happened on the weekly chart here on the. Let me just delete this straight off the screen here. We can see here on the weekly chart on the Nasdaq, look what happened. It ran up, hit this double top formation here. So we've got this top formation here, ran up, completely rejected it, came all the way back down and closed lower. So now we're actually rallied up through here. I wouldn't be too surprised to see this thing come up, hit the level, maybe run up a little bit more, hit the 9,800, and then start to head down like that as well too. The same for the S&P 500. We can see how we actually had this sort of really bullish engulfing pattern through here. Okay, and the very next bar we actually had a bit of a pop up, a bit of a gap down on the weekly, and then we continued up. Now we're getting a bearish engulfing pattern. You can see we're having a little pop up. Even if we got a little move to the upside like that, we're probably likely to fail. And then we're probably likely to start to do something like that in the markets. That's what I'm seeing through there. But the big thing, guys, that I'm looking at here right now is this is what I'm looking at here. This is one of the news articles I've seen on Zero Hedge. And the title of the article is "The Fed Has Monetized All Treasury Insurances in 2020." Look at this here. Isn't this interesting? This is this graph through here is really interesting to me. You can see that the blue line here is the bottom 90% earners, okay? And this is obviously when Nixon took us off the ends the gold standard. Basically, it's no longer pegged to the US dollar. And then the bottom, you can see that this sort of orangey, sort of brownie line is the bottom 1% earners. And you can see that ever since 1970. Incomes are pretty much sort of stayed the same, pretty much roughly. They've been sort of just going sideways, even slightly dipping now. This is actually in 2010 as well too, so I'm not exactly sure where it is right now. I'm pretty sure it would have been much higher. But looking at there, right, you can also see that the upward slope since 1970, the top income earners did that. Now I wonder why that is, right? Because obviously when Nixon took us off the gold standard, guess what happened? Printing press started happening. When the printing press happened, guess what? Inflation bubbles in asset prices where most people don't have that. Now, the bottom 90% earners can do that if they want to, right? They can start to take, 5% of their wage that they earn, and they can go buy some stock if they want to, but they just choose not to. So So really they can start to become part of the pie of when people start to make money. It's like, oh, the rich get richer, the poor get poorer. It's like, yeah, well, maybe if you bought stock at $90 10 years ago as well too, you know what I'm trying to say there, right? So that's what I'm seeing through there, guys. Also, what I'm seeing here as well too, look at this here. Isn't this an interesting chart? This is the wealth gap. This is the bottom 90% of the wealth gap. But look what's happening through here, right? We can see here the bottom wealth gap. This is back in 1999. This ends here around 2013. It's actually a lot sort of worse through here. But there's a massive gap right now where we are. This is 2013, but right now 2020, there's a massive gap from the bottom 90% and the top sort of 1% through there. And that wealth gap will start to come back into play. Well, I'm hoping so anyway. And the last one that I want to share here is this is the one that's really, really interesting. Look at the Fed's balance sheet versus the Treasury debt. Absolutely crazy, right? Now, this is an up-to-date chart. We can see here back in March and April, it absolutely exploded. Absolutely exploded. Now, guys, this is not going to end well. This is going to be devastation to the max. Why? Because the Fed has now gone from about a $1 trillion in deficit to $4 trillion in deficits. That's crazy. Absolutely crazy. So people that have these government jobs are going to be on rocky roads. Pensions, healthcares, hospitals are going to be all affected by this. They will be. And if you're thinking that, the last sort of 20, 30 years that the government has had pensions and all that sort of stuff and to help you out, it's probably not going to happen. Right, because of what's going on in the markets right now and what's going on in this overall economy. Because this is just crazy, right? Just imagine, guys, we start to get a little bit of inflation over the next couple of years and the interest rates have been forced to raise up. Guess what's going to happen to the US debt? Big, massive default, right? They won't be able to pay it, right? It's all going to come crumbling down big time. The only reason why they're printing so much right now is because of 0% interest rates. So it's absolutely just mind-boggling right now to see what the government's doing right now, and this will end really, really, really bad. They're doing whatever they can to kick it down the road, but I believe we're at the early stages right now, in the middle of forming a big, massive top formation on the markets. I don't believe we're going to make all-time new highs, or we're going to make all-time new lows this year. And I do believe going into next year, especially towards the end of this year, when things really start to unravel, when people have to start paying their mortgage back, the JobKeeper payment disappears, people have to start paying back their loans that they borrowed for the businesses, it's going to be bad. So that's what I'm seeing through there, guys. Update on the GDX. GDX is doing exactly what I thought it was going to do. We're still continuing this big pullback through here. Let's go to the daily chart. Nice pullback through here. But once again, guys, I don't believe the GDX is going to be big at all. I don't believe the pullback is going to be big at all. I believe it's going to be short-lived, and we may get a little more downside from here. But I believe we're already in the mix of starting a big bull market in GDX. Same for the GDXJ, right? We've had a big run up, getting a small little pullback. I see we're probably likely to do a bit more time through here. Maybe we've had a big move up through here. So probably even if we did start rather see something like this, or we start to see something like this, just go sideways a little bit, we're probably likely to spend a bit of time going sideways before we start to see an up move out of the GDX through there. SIL and the SILJ, or the SILJ and SIL, same sort of thing, right? Very big up move. We're getting a pullback right now. We still may get, on a short-term basis, get a pullback. But I believe this is the start of a very, 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 very big move to come when it comes to the mining stocks indexes through there. Silver and gold right now. Gold is pretty much still on a flat basis, right? Massive, massive, massive flat basis. Big move up, a big sideways phase. So if we start to get, this is a sort of this level through here. If we start to get a break out of this level through here, we're probably likely to go for a nice run out of this level through here. So we're not dropping down at all. We're still holding here. So a break up, we're likely to see a very big gallop up, probably all-time new highs, which is at just up there. So if I bring up my daily charts, we could go for a very nice run right up to this $1,900 level as well too. And then also looking at the silver market as well too, guys, we can see that the silver market is still compressing up this level here. I see this compressing up, and then I see something like this happening, right? Basically a breakout like that. And then once that happens, it's on like Donkey Kong, and I see a lot more upside to come out of that level there. We do have a bit of a short-term resistance around that $22 level. So once we break this $18, $19 level, we're probably likely to go for a very nice move up to around the $21 level on silver there. So that's what I'm seeing through there, guys, when it comes to silver, gold, and the mining stocks. And this is what I'm seeing with the overall economy right now, guys. Right now, we are definitely in the mix of a war zone. And on a nutshell, guys, on this weekly chart through here, I believe this engulfing pattern through here is going to start to play out on a short-term basis, pull back, and because the government's doing whatever they can to start to support this, but I just don't see this ending well at all.